Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. All right. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. I'm not sure where he is right now, but he's floating around in the background there. If you want to know what happened yesterday in the markets, there he is. He's got his hat back on. There we go. If you want to know what happened yesterday in the markets, look no further than over my shoulder. That is your chart of what happened yesterday in the markets. Not a great day, as you can see by my lovely artwork. I'll be adding a new sign every day, so I'm not quite sure what I'll do for today's market, but we'll see. So anyway, no shortage of news to discuss this morning. We have a potential bailout on the table in the airliners. Regeneron gave us a big update on their COVID-19 vaccine program. We'll talk about that. We'll talk about the automakers with our guest, Michelle Krebs, at 8:35, and how this is all impacting the automakers and what their future holds going forward. So we'll talk to her at 8:35. And pretty volatile overnight market. Joel, tell us what happened here in the overnight session.
Let's see. Well, we're in the green by 3, let's call it 4 because we're moving so fast here. That close was 05 1/4 at 09 1/4. We got up to 24.07. We were lock limit, but boy, oh boy, I did not have a chance to look at your ladder and or your matrix. So, man, those limit situations, you can keep an eye on that and see how many stocks are bid or offered on that. The other day when we were lock limit down, there was like 5, 6, 7,000. And I was like, rut-row, we are not coming off that limit. So it's fun. I mean, I don't look at the depth of book very often, but in those situations, it's useful to look at it. Crude trying here up 17 cents at 28.87. Gold in the red by 8 for $10, man, the way that thing moves at 14.76. Silver down again. Silver's getting hit hard, down 38.6 cents at 12.42. Bitcoin back over 5,000, up $340 at 5,270. And sitting in for Dennis is Archie Bunker.
Archie Bunker?
Yeah.
I thought I was going with the John Candy look.
And
Uncle
then
Buck.
Uncle
Buck.
And then for the first 5 minutes of the show, Dennis is going to tell us how he's going to do virtual fishing because he's got his fish. You must have a really long line.
I got a good one.
No. All right, Triple
I did
D.
some fishing when I was a kid, though. Were you a fisherman when you were a kid? I don't do as much now, but
I hated it.
didn't like it?
And I got a fishing story I can tell you about when Lisa and I went a couple years ago. But before we move on, before we get started to stuff.
Was it a whale of a tail?
She told me, I think I'm going to get sick on this boat, and she did get sick.
So you're telling me you guys come see me in my cottage, I shouldn't take Lisa boating?
Well, we can fish from the dock. But also, I just want to read one comment here on the YouTube video. We're getting feedback, negative and some negative, some positive, but it's America. You can say and do what you want.
For sure.
But 13 hours ago, Tiffany W said, listening to Dennis, Joel, and Spencer has been part of my daily routine. And I thank you gentlemen so much for making a new show every day. All conversations, even the occasional jokes, will always make my morning. Dennis, you are a highly intelligent individual with a kind heart. Whoa. Don't let anyone say otherwise.
I feel like I have a kind heart. I don't know about the intelligence all the time. I'm not sure about the intelligence all the time.
And I would say, is your mom's name Tiffany? But I know she's been a little bit harsh on you, so it's not your mom that posted that.
No. Yes. No.
Okay.
My mom was like it yesterday. She listened to the show all the time, and she was like, You're Joel. Joel's gonna get mad at you. You're talking over him again. I'm like, Mom, I talk over Joel every day.
That's what
I know. I need to. I do, and I do apologize sometimes to you for it because sometimes it gets more than others. I get wound up and I just start talking and rambling. A little bit of Jim Crameritis maybe in me like that, but I do apologize. I was talking over a lot of both of you there yesterday, Spencer. But anyways, we are passionate about what we speak about. this is another one of these days that is not really materializing that well, because we rallied significantly overnight, like you said off the hop, got up, we were limit up for the majority of the night until 4 o'clock. What happens at 4 o'clock? SPY and the equities open. SPY actually went up as much as almost 7%. So we're lock limit up on the futures, obviously up 5% with the futures, but the SPY can trade freely. So we knew it traded as high as 255 on SPY, which if you show that chart, after hours chart, you'll see it. And then we just started leaking, and we started leaking, and we started leaking. With an hour and a half, we went red, which was unbelievable for it to leak back that much of an overnight gain. So you can see the big spike and you can see the big fall. Yesterday was a similar story, which is concerning as well, because during the day we opened and then we got a nice rally. And where did we stop out at? Where did we really pause? The same area we paused at 4 a.m. 255 to 256. So there was technically base there. Technical resistance becomes huge there. Again, in this market, just as much as for years we've been buying the dip, what I've been telling you guys and girls is that this is a sell the rip market. Yes, some dips have worked if you've timed it right, but all the rips that you've sold have been correct in the last month. So I think we continue to do that because of the news flow. I mean, you just look and you think about where we are, and if we're going to eventually be like Italy, and I believe we are, unfortunately, I think the news flow still is negative for a while. And that's why I'm still sitting on all my cash, and eventually I'm going to deploy some of it. But at this time in my investment portfolio, I'm sitting with cash, still trading. I'm market neutral. I'm buying and selling stocks, buying and shorting, buying and shorting, buying and shorting all the time. It's kind of interesting to short stocks with the alternative uptick rule in place, because you can't hit a bid, so you got to work it a little bit harder. But we're getting by.
That's instituted now?
Yeah. So what happens is, and this is how uninformed the media is. You've got people wanting the uptick rule back. The uptick rule is basically been in place this whole last week and a half, because when any individual stock moves more than 10%, the alternative uptick rule comes into place, and that rule is there for that day and the next day. Well, all stocks seem to be moving 10% at any given time in 2 days, so almost all stocks are being covered by this rule right now. So really, for the last 2 weeks, we've almost seen all stocks. Like, there's a few that aren't, maybe some of your, less beta stocks like an AT&T might not be covered, but Apple, all the big guns are all under the alternative uptick rule, it seems like, every day. What that means is that you cannot hit a bid to get short. You have to get lifted on the offer. It's actually, the rule's more stringent than the original uptick rule. So those calling for the uptick rule and blaming the uptick rule, this fall in the uptick rule, don't have no idea what they're talking about, because the uptick rule is already in place and the rule is more stringent than it originally was, because under the previous rule, which they abolished back in like 2006 or 2007, you could hit any bid if it was an uptick. In this case, you can't hit any bid. You have to get short on the offer. You have to be lifted. So even if the bid is an uptick, you can't hit that bid. So the rule is actually very stringent. So, and you do see lots of inefficiencies. I don't mind inefficiencies. So if they want to keep these rules in place, I'll take advantage of these inefficiencies. But those calling for an uptick rule here, you already have it. It's in place.
All right. I muted myself. Can you guys hear me?
We hear you, Joel.
Okay. Now this might not make any sense, but I'm kind of glad we're not limit up. I don't want to see us have these, I really don't want to see us limit down, but for me to say I don't want to see us limit, I want to see us build a base. This market is not going to have a sustained rally until A, we build some kind of base, and B, the volatility comes down. Now, I did get a chat. The average daily range now is up 100, couple hundred points. But if we can just calm down,
yeah,
I mean, not even necessarily go up.
Yeah.
But and I think today has the potential to be one of those grinder days.
Can we get an inside day?
Oh, if we had an inside day, I'll do a handstand on the show tomorrow.
We need an inside day. I'm with Joel. We need to calm down.
An inside day. Would I love an inside day? That would be,
We're setting up to get, I feel like we're setting up to get an inside day. We know there's major resistance up there at yesterday's high, 256.90, because we got there overnight around 4 a.m. and rejected very, very quickly. But we also know there's support, because if you look at this overnight range and bring it up, We got down near yesterday's low at around 5:30 this morning, and we bounced right off of it. So now you're getting some well-defined parameters, at least for you day traders out there. So hopefully, the inside day that Joel is saying, I hope that can happen too. I like the volatility as a trader, but as an investor, I hate this. I mean, you're watching in yesterday, and I here I am. I've called this the whole time. You've listened to the show. I've called it the whole time. I obviously, had some hedging in place, which I took off at 270 SPY. So since then, my portfolio is wide open again. Again, I sold a lot of stocks. So I'm 70% cash, like I've been saying. But when the market falls 10% in a day,
You get killed.
and you're 30% stock still, you just lost 3% of your net worth. That's incredible. So here I am thinking I'm pretty good. And I was like, holy cow, I lost a lot of money in my investment portfolio. This is my long-term retirement account. You hope eventually these stocks do come back. That's why I didn't liquidate everything, but wow. So I'm getting whacked on it too. I didn't want to go 100% cash. I said that back because what if I was wrong and the stocks kept going up? And, then I'm 100% cash, I'm getting worse off than everyone. When the market's falling, then, if you're sitting with a good amount of cash, you can eventually put that to work. So that's my thought process here. I'm still not deploying any of my cash yet because the news flow still has potential to be very negative. I mean, there are still people going about their business. A lot of people are taking this seriously, but a lot of people did you see the video, Spencer, yesterday? People on the beaches enjoying the surf, all crowded on, laying on the beach, getting a suntan. I don't know where that was. That was Florida or where that was, but
wasn't here.
I heard about it in Europe, actually. I heard
it was in the US. Like I saw pictures of it. I'm not sure where those beaches are, but they're spring breakers, the YOLO people, you only live once, out there just going about their business and saying, well, I can survive the flu. I'm going to go have fun. What they're not considering, though, it's very inconsiderate because some people can't survive the flu. And if you get it and you spread COVID around for 2 weeks, not knowing, somebody older could get sick and die because you were out there having fun. That's why I feel like it's very inconsiderate now to just be running around and doing your own thing and ignoring what is really out there right now. So, but people are doing it still. And that's why I think eventually you will get this government shutdown. I mean, now you're seeing restaurants close, McDonald's closing dining rooms. Eventually everything is just going to close down except pharmacies and grocery stores and hospitals.
So someone in the YouTube chat just said he lives near Siesta Key and it's spring break and the beach is packed.
Beach is packed. Where is that? Where is Siesta Key? What state?
Florida.
That's in Florida. The beaches are packed. Yeah. I mean, this is concerning people. And that's why, and people don't like it when I talk negative, but I'm just trying to spread the word here that social distancing is what you can do as an individual to help this problem. It's what you can do to help your stock portfolio. If you're worried about your stocks going down, the best thing you can do is stop going around because that's going to make the spread worse. And it's going to give us the potential to be like Italy. But if we can shut it down and we can all stay home, we can actually get on top of this and we can be in a lot better shape than Italy. The choice is still ours here right now. It is spreading out there. It is out there, but it's going to continue to spread as long as people are just going about their business and partying on the beaches and going to bars and eating at restaurants. You do your part, and that's what we're doing. I'm on day 5 of self-quarantine now, and I'm feeling well, so I'm not sick. I don't have COVID. I hope I didn't have COVID. If I did, it wasn't that bad. But, at first, I was quarantining for a couple of days because I wasn't feeling good. But now I'm just going to stay in self-quarantine as long as our food supply lasts. And, obviously...
Real quickly, educational moment here. I know a lot of people listen to us on portable devices, on their phone or whatnot. And an inside day is just where you don't take out the previous day's low. Yesterday's low was it way down at 2350? Holy mackerel.
I know.
Wow. I'm just losing my number. This is absolutely crazy. No, I'm looking at the
yesterday on SPY
2350, wasn't it?
237.36. I don't use the E-mini because again, I'm trading from 4 to 8, so I don't need it. But if you're trading overnight, you do need it. So 237.36 was low on SPY.
2350. Joel, you're right.
Yeah, 2350. Yeah. Oh, okay. I see what I did. 2350 was yesterday's.
It's
low.
easy to get handleitis with this.
I know. Well, I've whatever. I've been doing some things with my layout, and I'm like, what? We're not that far off the high. Yesterday's low 2350. The current low 2370.75. So there you go. So we're holding up there. We're 50 50 points away from the low, 70% taking out that 2350. On the upside, yesterday's high was way up there at 2650. So I think that's safe for now. So what we got to do is we just got to stay in this 2400 handle, just battle it out, maybe close over Thursday's close. And that was my key from yesterday, folks. And I talked to Dennis about it, and I talked to my buddy Jim Tassoni, who's doing some great trading in this. And I said, man, everything that happened, we were still above Thursday's close for a while. Now, it felt a lot worse than that, but really it wasn't because of the ridiculous rally that we had on Friday.
So we just gave back like half of what we gave back was the ridiculousness of that rally, which wasn't real. It was there, and if you sold it, congratulations, but it was there for like 20 minutes. Even after hours, they started spanking it down, so it wasn't there for long.
So from an overall market perspective, we're not much, the market's going to bottom ahead of the news. The market is going to bottom ahead of it, right? So that's what I'm saying. So here we are. Let's call it 2436, 2456, Thursday's close. Let's hold it inside day. There's a technical look for you.
I mean, you just think about what stocks, though. And what I want to say is, and people don't like the comparisons to the financial crisis, but some of these stocks are in a financial crisis right now. UAL and the airlines are asking for money. They were already in a financial crisis of their own. Is every company going to go in it? Absolutely not. Apple probably has enough company. If the economy shut down for a year, Apple would still be fine. They have a ton of cash. Google, ton of cash. Those are stocks that are going to hold up better in this because they can handle this economic pause. That's what I've been calling it, as an economic pause. Certain companies cannot. I mean, it's absolutely ridiculous in my own mind that the airlines are already asking for money. I mean, really, their sales have been down for a month and they're still getting some revenue in. How can you'll be 1 month into this and already be out of cash and already be needing money? I mean, they're that tight. So that's the way these businesses are run. They're that tight. So, I mean, that's what it is. These are not companies I want to invest in this, though. So people have been saying, well, I could buy UAL at 35 because the government's going to bail them out. They're going to bail them out. But the way it worked in the financial crisis, it didn't bail out the shareholders in a lot of cases. A lot of times the shareholders were left with almost nothing. It bails out the bondholders typically do get bailed out, or the bondholders become the debt holders, like in the case of GM. So, I mean, you've got a situation where they're not out there to save shareholder dollars. They're out there to save the companies in these cases. So don't be banking that, I can buy UAL safely at $35 because no matter what, it's going to get bailed out and the stock's going to come back. That's not necessarily the case. When they bailed out Bear Stearns, the stock was 30 and then they bailed it out at $2. So, I mean, these things can happen. Don't be surprised if this really starts to get ugly and we have a prolonged shutdown, that UAL and some of these airlines and some of these stocks that are really getting hit, the cruise lines, could be much, much lower. So those are no touches for me. All that stuff's no touches. If you absolutely have to get in stocks, look at the balance sheets, look at the stocks that have stronger balance sheets, stocks that can be sustained stocks and companies that can handle an economic pause of 2 to 3 months or maybe longer. We don't know how long it's going to happen, but I think that's where we're going. We're going towards this economic pause.
Debt to equity ratio is one I've been looking at.
Classic valuation.
Yeah.
Just going back to it, and this, maybe in the next couple of days, I've been so busy. We're trading stocks nonstop here. I haven't been able to sit down there and compile a list here yet. But there is going to be, just off the top of my head, like I said, Apple, Google, Amazon will probably do fine here. Microsoft will probably be fine here. These are
Berkshire. We just companies with a lot of cash.
Those are the companies like Microsoft. It's probably if you bought it here 135, you look at 5 years from now, you're probably happy it did. So if you need that money next week, absolutely not. If you need that money in 10 years, maybe a nibble here. So maybe you look at some of these opportunities because these are good companies that have a lot of cash that are going to survive an economic pause. Restaurants, smaller restaurant stocks, like I gave the examples of Dave & Buster's yesterday, I'm not sure they can survive. The market is saying no. Things at $7. It was $11 when I said that yesterday. It's $7 here now. Here it is. The market has a decent rally yesterday. It doesn't participate in it whatsoever. It did sell off at the end of the day, and then it leads the charge down. Some of these retailers are ground zeros. They were already in trouble before this stuff happened.
Yeah.
I mean, Macy's was in trouble well before. And now this is a tipping point. This is the icing on the cake that could bring a lot of these companies down. I'm not saying which ones are going to happen. I'm giving examples of ones that could happen. Kohl's,
I think you got to add, you got to be a little cautious on the banks here.
I think so
obviously.
too.
Yep. Yep.
Yeah, I
But
think you
I'm
got to be
never
cautious on the banks.
and I think that you need I mean oil companies. I think you
Well,
got to
and
be
and
careful there.
these companies were in trouble. So look at all the companies that were in trouble before the coronavirus crisis started. Those are the companies that are really getting hit now because they were already teetering on having problems. So this is just now enough to push them over the edge. So retail, oil, banks are a different story, but airlines, you know, obviously is but retail and oil, those two industries were already in a world of hurt. So now they're in even more of a world of hurt. So that's all no touches for me too. So I would say do some classic analysis. Look at your balance sheet. Look at the strong ones. We gave you 4 names there. 4 names that I would be buying if I was buying it. I'm not yet because I'm still trying to time it better. I think it's lower yet. But Microsoft, Amazon, I like. Google, I like. And Apple. I already own Apple. I already own Google. I did not sell 1 share of my Apple or Google because I believe in those companies. But there's also coronavirus plays out there too. You know, we can go to that playbook as well if you want. I mean, Netflix, you know, and then obviously you worry their productions are down and stuff. But if you think about it, they're saying, you know, everybody's sitting at home in quarantine. I don't think Netflix revenue is going to go down that much here. So Netflix is one that can actually hold up pretty well despite a lofty valuation.
Okay.
I would add
Spencer?
I would add Berkshire Hathaway to that list. Just
Warren's good to go.
Oodles of cash, you know it.
But again, remember he's like a mutual fund, so look at his holdings. He owns some airlines, so
right,
his
that's
holdings,
true.
he's going to be fine. His individual holdings could take a hit, and this follows his individual holdings. So something, you know, like I don't know what his exposure is to Delta and all those. Delta, I don't want to own that stock right now. So if he's got a big chunk, you know, 3-4%, I'm not sure. You got to go look at what the individual holdings. We know he owns a big chunk of Apple. Is Apple's going to hold up well? But why not go to the individual stocks? And I would say I would just pick on, if I'm buying stocks here, I'm picking stocks that have very little debt. A lot of tech companies. I think, you know, your NASDAQ's going to hold up better because there's a lot of tech companies. Some of the chips I'm interested in here too. They've been hit so hard. But so you got to watch some of the chips because some of those have some some debt as well. But remember Micron? I sold that last month when the thing got up there near the 60. It's back to where I bought it, or it's back to below where I bought it. It's $34. I mean, you're coming back down here to 30. Western Digital, same story. It's actually making a new low, which is incredible. This was $70 WDC 3 weeks ago. It's been a 2-for-1 split, $33. I mean, chip
Dennis,
demand
could
is going to be there.
we're getting a question here. You know, not everyone understands the terms that we use on the show here.
Sure.
And it's kind of self-explanatory. Could you just talk about buybacks for just a minute? If you could talk about something for just...
Well, you had a lot of banks doing buybacks and announcing buybacks because they had...
Everyone was doing buybacks.
They were all doing buybacks because they had an excess amount of cash. They're all a little bit scared now. They're all canceling their buybacks. We saw 3 of them last night. I think Comerica canceled. I believe. Who else was RF? Maybe
so wait,
canceled.
hon. So wait. Just to back up here, a buyback is when the company uses cash that it has to buy back its own stock. Okay,
they believe their stock is too cheap,
right?
And they're going to buy back shares and retire those shares. In essence, there's less shareholders out there now, which means earnings per share will go up because there's less shareholders. So
there are a fewer number of shares out in the open market, and the company owns a greater portion of their own shares, and they use the cash they have, or in some cases, maybe even use the cash that they borrowed to buy stock back. And a lot of companies who did that are now in this position where they just spent a lot of money on their own shares that are now worth a lot less than when they bought them for.
Let's go to Finance 101. There's 3 things a company can do with the money that they make. They can, 1, reinvest in the company and expand their businesses. 2, they can hand it out to shareholders, and that would subdivide into either giving them a dividend, paying them directly, or buying back stock. That's really the 3 things. So you invest in your business and you expand your businesses, which we know Amazon has done for years, or you give it back to shareholders in the forms of a buyback or a dividend. That's really the most of it. Did I miss any? I'm just going from my head, but it's been a long time since I took Finance 101.
That's pretty much it.
That's pretty much it. So buybacks obviously increase your share price because there's less shares outstanding, which means your EPS is going to go up. I mean, Apple, a lot of their earnings, their EPS beats have been driven by share buybacks because it's not so much that they're growing earnings so much, but they are decreasing the amount of stock that's out there so much. So because they've done so many buybacks. So a lot of those companies now are a little spooked. The banks are preparing themselves. They know that they've got probably some bad loans on the table. But not only that, they got to prepare, for the potential that there could be people who want to withdraw their money. So because they're nervous. So that's why they're obviously suspending buybacks just to position themselves better.
Yeah,
better.
the banks did. All the banks, I believe, suspended.
And I said yesterday that there could be bank runs. I'm still going to say that. Kramer actually. So I took a lot of heat. Everybody is there was 3 or 4 people talking that's nuts. Jim Kramer said it on Mad Money last night. He said he took it a step further, and he said if the Fed wouldn't have did what they did today, that we would see bank runs. And I don't know if I agree that. I just said it's on the table. So Jim Kramer agrees with me. He had the same opinion as I did. He said it on Mad Money last night. I mean, you look at these stocks. It's not rocket science. Wells Fargo is $55. It's $27. I mean, it's not, absurd to think that some people could be concerned that there might be some financial problems in some of these banks. Now, we've talked with the European banks forever. Now they have, a lot of their economy shut down. Spain's basically shut down. We've got France basically shut down. Now we know what's going on in Italy. It's basically shut down. If more countries continue to shut down, this is not good for the banks either. So, and not good for the companies that they lend money to. So you've seen Deutsche Bank go in the last month and a half from 11 to 5, Credit Suisse from 14 to 6. I mean, these are 60% down in a month. So it's telling you that there is concerns that the market is telling us that there is concerns that some of these banks could have problems here again.
Questions here. Can we look at the Russell, the IWM?
Yeah, wait, real quick before you do that, I just want to, and I wouldn't normally say this, but we have a number at 8:30. We have U.S. retail sales for February.
Spencer, that's old news, buddy. That's it doesn't mean jack.
Well,
no, it doesn't. Dennis, what do you think?
Yeah, we're not at the point yet. I don't, we're
getting
what month are we getting for?
U.S. retail sales, and here's what I would say.
Yeah, but what month is it covering?
February, and here's what I would say: if the numbers are weak, or if they're already weak from February,
scary,
then watch out. So we're expected to rise 0.1%.
March is going to implode. We had a little bit of worries at the end of February, though, so it could already show some weakness. You're right, Spencer, because we had about a week or two.
I'm saying if they beat the number, who cares? You're right, Joel. If they miss the number, maybe watch out.
It could be concerning. Yeah.
So 8:30.
All right. Well, I'm going to cancel all my orders. Thank you. This is what you do when you're unsure. You don't have orders sitting out there, so you get picked off by high frequency traders.
All right.
The S&P's have a big move. So we'll see. I think you're going to see crickets too. But we'll see if we get some movement here in 2 minutes. 1 minute. 1 minute.
Okay. 1 minute here. As the market is kind of finding its footing here, mid-range on the session, 24.3450. Where did we just get to? We just got by that level a little bit ago, didn't hold. So let's call some important levels, 24.35. And then even though we sliced and diced through 24.56 a lot yesterday, it's an important level. Actually, the 15-minute chart is telling you 3 consecutive highs at just under 24.38. So that's pretty darn close to my number. So let's clear 24.38. Excuse me. And then on the downside here, man, I mean, we've gone red several times.
Clear your throat, Joel. We're not seeing any movement here on this number. Not like zero. It's complete crickets here. So I haven't seen the number cross yet. Did you get the number?
Yeah, down 0.5%.
So that's not great. Where were we projected?
I saw we were projected. Let me pull it up here.
I saw we were expectations.
Here, I saw a 0.1% projection. And I'm seeing
down slightly.
I'm sorry.
So market is leaking here a little bit on that number.
Yeah.
So Spencer, we are leaking here a little bit on your number. We're down about 5 points since that number came out. So retail sales, yes, we're down 0.5%. Estimates were to be up 0.1%. We know next month it's going to implode because there's a lot less people doing shopping in March here. And obviously the months after that, it's going to continue to be down because everything's gonna be closed. So again, we're just gonna say, if you're looking at buying these dips, there is opportunity out there, but I would pick on the companies and buy the companies that have stronger balance sheets at this time.
How about Regeneron? Let's go over Regeneron.
Oh yeah, good story here. Let's go.
Yeah, we haven't actually gotten to this one yet. I'm surprised. So Regeneron gave an update overnight on their, I guess you can call it their vaccine program, and here's what they said. They said that they made quote important advances in their coronavirus antibody program. They plan to initiate large-scale manufacturing by mid-April with an antibody cocktail therapy, and there's the potential that they could enter human clinical trials by the summer. This is from a PR about, I don't know, an hour and a half ago.
Regeneron was hadn't even made a trade in the pre-market when that came out, because as soon as that headline broke from Benzinga Pro, I went over and I tried to buy it, but there was nothing up until 475. I actually tried to bid 460, but no dice. There was no takers on there, and then it went to 475 and 480 and over 500. So I could have lifted 475, but I didn't want to pay up 35 points.
They don't hit bids when something's going on.
Yeah, but here's the deal. And if you just lift the 35-point offer, you might be paying up too much. So it's like, what is that worth? At that point, I'm like, I'm not comfortable enough to pay up 35 points for it. Whew. So I was like, I'll pay up 20. Somebody want 20 points? You know, maybe somebody says, I don't think it's worth 20, and they hit me. I thought it was worth more than 20. Obviously, right now it's worth 47. So, you know, would have been, in hindsight, Capital's 2020. It would have been worth 12 points if I would have lifted the 475, but I didn't have the nerve to do it because I hadn't even made a trade yet at that point in time. So
yeah, I'm getting a question here to look at Eli Lilly, and I think this puppy's holding up pretty well.
Again, they have trials going too, do they not, Spencer? All these biotech stocks that are cooking on COVID are holding up very well, because everybody's kind of saying, first of all, drug companies are not at ground zero for this. People are going to take their drugs no matter what. The pharmacies aren't closing. It's not like you're going to not get your pills. I mean, you know, some of it comes from China, yes. So, you know, there is a delay on some stuff. I know on my glaucoma drops, I was having trouble getting them because they were coming from China and they had to give me a generic version. But for the most part here, drug companies are not ground zero for this. These are the companies that probably are going to hold up better. And especially the biotech ones, like I said, Gilead, potentially Lilly. I know it's a pharmaceutical, but not a biotech, but I believe that they are still working on something there too. And Regeneron, these are companies are holding up well because they are potential COVID plays as well. So these are stocks that I actually don't mind. I've said Gilead multiple times. I don't mind it down here. Wow, what a wicked candle yesterday on that thing. But I don't mind it in the mid 60s because they have the wild card that maybe, you know, it's their drug right now. That's the only one that's even helping with, you know, helping to not cure this, but to help with the symptoms. So these are, I don't mind these stocks on pullbacks.
Also, I'm just going to call you Lack because I can't pronounce that name. It's also important to look at things on a relative basis, right? And this stock hit a bottom in February at 121.51, right, where we started getting some chaos, and we haven't really come close to that low yet, 125.93. So on a relative basis, of course, if the whole market goes completely, then it's going to go too. But the stock is holding up well on a relative basis. I think one part, like when we rebuild this economy and, you know, our healthcare system and everything, I think we're going to start making a lot more of our drugs and our medications here in the United States.
I think it's an eye opener. I think it's a good point, Joel, because like I said, I went in and, you know, I went to get my glaucoma drops. I have to drop those in my eye every month for my eye pressure. And they're like, no, those are, they called all the Shoppers Drug Mart is what we have in Canada. It's like CVS or Walgreens. And they called them all and they're like, no, nobody has that right now. And then I was like, why? And they're like, well, it's just we're all on back order. And then I put it together. I was like, oh, those come from China. So I'm like, you know, that's why you're seeing. I actually was able to get them at some like a no-name pharmacy, a smaller one that obviously everybody hadn't exhausted yet. But I mean, that's, you know, a concern. If you get medication that you can't get a generic for or another drug for to help with, and all those pills come from China, and we saw what happens when China goes off the grid not making it. That's a concern. So there's a good point you're making there that I think we need to think about that going forward.
All right, I want to bring on. Oh, Joel, you want to have a comment before we go? I was just
going to say, if you guys have when we're talking to Michelle, if you guys have an issue or two or something, I haven't really been looking at individual stocks.
I have. I've been writing them down. So
you've been writing them down. Okay,
we'll cover that after.
Let's go with Michelle.
I want to bring Michelle Krebs on right now. She's executive analyst at Cox Automotive. Michelle, good morning.
Good morning.
Thanks for joining us today, Michelle. I want to start with the timing of all of this madness, right? The fact that we are in March versus a different season. How is the timing of this impacting the auto industry right now?
Well, March is one of the top 3 months for sales volume. The others are spring as well. So, the spring selling season is really important to the auto industry. So, timing-wise, could have been better. We did see really strong sales through the beginning days of March. We're waiting to see how the month actually turns out.
And I mean, obviously, your prior estimates can kind of be thrown out the window here, and
Totally.
totally, and there's really no way to give estimates now. But best you can tell, I mean, what are going to be the implications here?
Well, it totally depends. So our initial January forecast for 2020 was 16.6 million. That is no longer achievable. We're putting together some different scenarios based on how well we contain this reaction, what it does to the overall economy. We do think the impact will be an immediate downturn. We'll see new vehicle sales fall over the next few months, but we do think they could recover later in the year. So initially, sales will definitely fall below that 16 million seasonally adjusted rate. Now, if a downturn, if it worsens and we're in a full-blown recession, we could see new vehicle sales fall to about 14 million or even less for the full year.
And what about for specific automakers? I mean, I'm looking at Ford and GM here, and obviously the stocks are battered as you would expect. But what can you expect, if anything, out of those two?
It's too early to say.
Too early, yeah.
Yeah, and we don't see. The other thing is we don't see. They don't report sales on a monthly basis anymore, so they only do it on a quarterly. We are trying to dig into our own data to kind of see how sales are going on a daily, weekly basis. But certainly they'll be hit just like everybody else will. I mean, I think the fortunate thing is they have kept factories running, and we had anticipated maybe some disruptions of production due to part shortages from China, South Korea, other places. That has not happened yet, but it still could.
Joel, did you have something you wanted to jump in?
Joel's on mute.
No? Okay, Joel's on mute.
I'm sorry. The old mute trick. I got to do it at least once. Michelle, you've been around a while like I have here. Can you draw?
That's a nice way to put it.
Yeah, but you're much prettier and much younger. Can you draw any parallels here? Obviously depression. We both went around 9/11.
I wasn't for that.
Okay, 9/11. The disruption. Can you draw any parallels from those events to apply? I mean, this is a much different problem, obviously.
Very different.
Yeah, the financial crisis.
Right, very different. I mean, although I would say, 9/11, it happened, and then, the markets closed, and then we came out of that, and and then the Great Recession, we didn't know how long that would last either. So we're kind of in that same boat with the virus. We don't know how long this will last. But it's interesting to watch what the automakers are doing. We're starting to see them dust off some of their efforts from the Great Recession and 9/11. General Motors yesterday announced 0% financing for 84 months with 120-day deferred first payment. That's kind of reminded me of Keep America, what was it? Get America Rolling or whatever the campaign was right after 9/11. Hyundai has resurrected the Hyundai Assurance so that if you lose your job, they'll cover your payments for a bit. Ford announced that, call Ford Credit if you have a loan and you're struggling. And they have we're going to see more and more incentive kind of programs. I think the question is, will they work right now of where we are? Because typically we've seen these as we've come out of these episodes.
Michelle, I got to ask, how well capitalized are these companies?
You're speaking out of my school. That's
Okay.
that is not my.
Okay.
I only know consumer behavior, sales trends, and that kind of thing.
So, and that brings up an interesting point is, we've been talking about, well, the virus could go away tomorrow, and it doesn't mean that people are going to go back to spending the money the way they were, right? So
well, I think that is the question. We may see when this is over that there is a bunch of pent-up demand to get out and go on vacation and buy things again. But we don't know. We did see demand was starting to dip a little bit. Obviously, the highest level of vehicle sales ever was in 2016, and we've been inching down a little bit. So it's hard to say. I will say this, though. It's interesting. Used car sales are really strong. Now, they typically are this time of year because of tax refunds coming back. People use those for that, and that seems to be continuing this week. So that's a bright spot in the economy.
Is what you just said? Is that the best case scenario here? That there's this pent up demand that when this is all over, is that the best case scenario for the situation for the automakers?
I don't know if I'd call it a best case scenario, but it's certainly something that's possible. And we've seen that before. I mean, if you looked at coming out of the Great Recession, there was a lot of pent-up demand. Used car prices were at record highs. We weren't producing a lot of new vehicles yet to get it rolling, but, we hit our highest level of sales. It kept going up and up and up till 2016 when it hit a record.
And then cheaper oil, obviously great for the consumer, but what are the impacts on the automakers when it comes to the price of oil?
Well, it's cheaper for them to operate their business. I guess, we've got cheaper oil, but where are we going? We're not going anywhere. And some people have asked, what's the impact on EV sales? Because, of course, there are a lot of EVs being made this year. I think the consumer is so used to fluctuating gas prices, they don't make decisions based on that. If they want an electric car, they're going to buy an electric car for many reasons, but I don't think there's a trade-off between the two necessarily.
Is there any automaker that you think, based on their sales trends, are in the pole position right now, or maybe best positioned to survive what could be an economic pause or a secular downtrend or whatever?
Well, I think it's. I don't know if I'd pick one. It's those who are well resourced. Toyota's got deep pockets. They and they are always pretty strong. Ones that have come out of China well, because China's the first hit we got, and if they can come out of that well and demand builds there, that can help those like GM and Volkswagen who do business there. They're not there yet. It's hard to say.
And have you been watching China at all? Like, is that part of your coverage? And I'm curious.
I don't study it real closely, but you have to watch it to see kind of how the trend goes. They are starting to get factories going again. It's far slower than people had anticipated. And then I think the question everybody's asking there is the demand there even when they get the supply going?
Right. And the fact that China is a few months ahead of us on this timeline would seem to give us some guidance at least as to how.
Right, and I think we should look at South Korea, which is coming out of it, and and of course Italy the whole industry has been shut down pretty much. So next to watch is Europe, and then us, and see different measures we're taking in different places. So let's see how it goes.
All right. Well, Michelle Krebs, you certainly aren't in for a boring 2020. That's for sure.
Never is.
Silver lining to this. Michelle Krebs is executive analyst at Cox Automotive. Michelle, thanks so much for the time today.
Thank you.
All right. 8:45 here, guys. I've been keeping track of the stocks best I can in the chats. One thing we talked about Regeneron. I did want to mention. Actually, we talked about a potential bailout in the airlines. They had the Airlines for America, which is a group that represents Delta, United, and Southwest, and American, had asked for some money yesterday.
I think that's kind of selfish.
I think it's just so quick. I'm shocked that they need money a month. We're a month into this. Really, their sales have probably only started dropping the last few weeks, and they already need a bailout. This isn't like we've been in this for months and months. I'm shocked that quickly they need money. So unless they're just projecting, but I was seeing, they're already drawing it down. I mean, you look at Spirit Air, look at the stock chart. I mean, it's not surprising in the stock charts, but I can't believe the companies are already out of cash. They didn't save much for a rainy day.
They're probably not out of cash. They just don't want to be out
Doesn't
of
sound
cash.
good. I saw what was yesterday with Southwest. They said they've drawn the credit line all the way down. I mean, sounds like they're running out of cash. That's very, very, very scary. That this quickly. And Southwest is one of the best ones.
Spirit's $11. Holy moly!
Oh, I know. That if we get through this thing and they don't need bailouts and we don't dilute shareholders to help these companies out, I mean, there is an opportunity here. But I'm just scared that they're going to dilute the hell out of the shareholders, like Citigroup style. And if they do need a bailout, and if they're already asking for cash, it sounds like they need it. So it's hard to buy them.
Yeah.
Unbelievable. Right. I feel bad for the shareholders, but you know what? I mean, this was the rating was on the wall for a month and a half here on airlines and cruise lines. We've been talking about since January.
Okay, I've been writing down tickers in the chat, so let's get to a couple of them. Somebody
Before we go, I just want to make one more point, and then we're going to do checker time for the last 10 minutes. But I want to bring up the charts of these two stocks here: Tiffany's, TIF, and LOGM. And this is when you know the market is scared. This is how you can tell. These are cash deals that are on the table. Tiffany's, LOGM, they're cash deals. Stocks were just trading happily, January, February, just below, the time value of money, really. Not a lot of risk to these deals not getting done. And all of a sudden, the risk arbs are like, no, thank you, because there is potential that these deals either, maybe the acquirer bails out because obviously the economy has changed significantly, or maybe, there's, not going to get the financing that they thought that they could get. So that's why you're starting to see stocks like Tiffany's, which has a cash deal on the table, I think up at like 135, imploding. I mean, if the deal goes through, the stock's worth 135. But the risk arbs are saying there's a good chance that this might not go through now. Think about that if you own CY. CY, we already saw, that merger might not go through. Then it's popped back up. And yes, it's close to being a done deal. But at the same time, if this
we've
starts
always,
really ugly,
you know what, Dennis,
it's risk reward.
We've always talked about this on the show, about when these deals, well, a lot of times when they're first announced, and then they hit these outrageous prices. Now, sometimes there is, a little bit more, a bidding war in some instances. So then you're wrong when, it goes higher and higher. But I mean, for years we've been saying, man, a lot of times when these deals are announced, and look at all the, pain that you went through. What was the one? I can't.
There's risk when you're buying these and just going for that last. That's why the risk arbs, leave it up to the risk arbs.
I'm talking about selling it, like the CY. Like, there's no doubt, whatever you're holding out here for, like the extra.
You're holding out for the last buck and a half. What's the cash takeout on CY, Spencer? CY.
Well, the high is $23.55.
Well, we know the high, but what's the cash
takeout somewhere around $24?
I'd imagine it's $24.
I don't have it in front of me, but I imagine it's close to being $24.
Man, if you sat through the run up, the thing, and then you saw it come all the way back down.
$23.85.
Yeah. And
so that's your upside. If you're buying this at 22, your upside's $23.85 that the deal goes through. Deal doesn't go through for whatever reason, and it's high likely it's going to go through. But if it doesn't, and Infineon's the one that's acquiring them, if it doesn't, you can see this thing back down at $12. I mean,
the other way to look at this is these are the stocks that will V bottom. These will V bottom. When we get through this, they will go back up immediately.
Yeah, if the deal goes through. If the deal doesn't go through, these implode. So I wouldn't say, Tiffany's is just a free $20 here. It's a free $20 if the deal goes through. If this starts to get ugly and they pull that deal, where's Tiffany's right now without that deal on the table? You think about how much retail has imploded. You could make an argument Tiffany could be $50 or $60 without this deal. You could argue that because retail's in so much trouble since this deal has been announced. So, I mean, on 115, the risk arbs are saying no thank you, and they're now pricing in risk. They weren't pricing in any risk a month and a half ago to this deal not getting done. In all likelihood, it still gets done, but the risk arbs are spooked. And I'm just giving this as an example. This is when you know that the market is nervous, when the risk arbs are throwing in the towel on cash deals. That there was nothing even announced on Tiffany's, like, oh, this is just people are scared now. So I didn't see anything come out that, oh, Tiffany's deal is in jeopardy. This is purely that they might not get financing, maybe. Risk arbs are speculating that something could happen here. Maybe the acquirer pulls out because the circumstances have changed. Scary situation. So when you start to see this happen, so for CY, yeah, I would not buy that at $22 with $1.85 risk.
I was talking about selling it. If you
I would
had
too.
it. Yeah.
I would sell that. It's 22 bit. I would sell that. If I was in that thing, I would sell it. If it gets taken out 23.85, then you miss on your last $1.85. But I'd ring the register on that thing very, very quickly if I was in it.
All right, somebody in the chat asked about Kroger a while back. The stock actually had a good day yesterday. Was among the crew of consumer staple
The
stocks.
food stocks did.
Yeah, that
all the
did
food
well.
stocks have held up well. You know what? They're not going to close. They're not closing Kroger. I don't think they're going to close the grocery stores. So there's people still have to eat, and they're getting a good lift here because everybody's going and stocking up right now. So think about like your Kroger's and
They're going to have a good quarter.
Your canned food makers, they're going to be fine. I don't know if it's going to be they are going to have a good quarter, and they're going to be okay afterwards too because people aren't going to stop with canned goods. Campbell's soup holding up well. Wow, you think I got my bookshelf full of Campbell's soup right now because our pantry was so full we had to take the books off the bookshelf.
Then you know what that means is you're never going to buy Campbell's
soup. I'm
not
buying again for a while, but eventually I will exhaust that. In 2 months we've ate all our Campbell's soup. I'm going to go back to the grocery store and buy more canned goods.
What flavor did you get?
I like tomato soup. Buy a bottle of the chicken noodle soup too. What do you buy? What do you like?
Well, I thought I was buying a variety pack, but I got chicken noodle. So I got like two, I don't even know how many cans come in that thing.
You're long chicken noodles.
I have long chicken noodle soup. Quite a bit of that. We haven't talked.
That stuff's gonna hold up though.
Yeah, it is. It is. We haven't talked to TLT or bonds as of late, Dennis. Lower interest rates, these bonds have just been, a flight to safety here. Do you want
eventually that will, this flight to safety trade is it's really long in the tooth already. So they're just gonna keep buying US dollars, forever and ever and ever. I mean, look at the US Canadian dollar exchange rate. It's $1.40 here now too. Canada's got an oil problem though, so maybe that affects that currency more than anything. But it's been flight to US, flight to cash, flight to US dollars, flight into buy treasuries no matter what, sell everything else. Eventually, when this thing comes out, that trade will reverse very quickly. And like you said, that trade will reverse faster than you think. And you know what? That trade could even start reversing even before we come out of this thing. So I'm not coming here and buying TLT. I think cash is still king, but you come in here and sticking your money in, long-term bonds here at 0.5%. I just think why not just hold it for nothing? You're getting 0.5%, and then you have you look at the 10 years 0.8% right now. You really need that 10-year that bad? I mean, if you think it's going to zero, I guess you're buying it. That's speculation that rates are going negative. Maybe they are. So I guess you can still make some money there, but I don't know. I don't understand negative rates. I didn't learn that in school.
Can we talk about Grubhub here? Talking about an economic pause. This is one company that at least in theory would survive an economic pause, would not shut down. I saw a headline yesterday that one of their competitors, I think it was Seamless, was waiving their fees. It's the only way people can order food. You can't go to restaurants right now, but you can still get delivery, and it's the only way to eat out right now. So a company like Grubhub would seem to be immune from a total economic pause.
These are companies that are probably, like you said, going to be okay here in the next little while. Again, I'm not 100% that grocery stores are going to stay open, pharmacies are going to stay open, but at a certain point in time, their driver safety is going to become a concern. If it really starts to get ugly. So don't, think that they just has to stay in business. We don't need Grubhub to survive. We do need groceries though. And, at a certain point, you might just have to take the risk to go out and get your groceries. But I think the delivery drivers, like even with Amazon, at a certain point, FedEx drivers, UPS drivers would not like the risk, because think about the risk that those guys are taking. Like we know, Joel's wife, fantastic doctor, they're taking the most risk at all. But every driver that walks up to 150 houses a day, you're getting exposed to a lot of different people. So at a certain point, some of those drivers just might say, I don't like the risk. And you might see some of those businesses not shut down, but slow down. So, and deliveries are just going to take longer to get there. I mean, at a certain point, if we get to that point.
Just a quick note on that. They're going to virtual medicine. starting today. They spent a lot of time yesterday getting set up, and that's what they're doing. Because, having people in the office, for other things and being exposed to other people. So I don't know how T-Doc is doing, but I see it up 323. But they're starting to implement those procedures. And and we've also been discussing a lot of other things they're going to be changing in the medical profession. And as I said yesterday, your doctors, your nurses, your grocery store clerks, your truck drivers that are moving this stuff. Those are the important people in society now, not your, not your multi-million, these sports sports has changed forever. I don't even want to go into a rant on that. I got a renewal for my Michigan football tickets, and I'm like, I don't know what the hell I want to do with this.
Joel, we actually just got some sports news. Some big sports news. Tom Brady announced he's leaving the Patriots.
What?
So,
like he's retiring?
He's a free agent. So
he's leaving the Patriots because
he's leaving the Patriots.
He's going to retire. So,
no, that's not what he said.
How old is Tom Brady now?
He's like 43. He said his football career will, quote, take place elsewhere.
So he's going to continue. He just wants to change the venue.
That's what a time to be alive. Okay. Economic pauses. Tom Brady's leaving the Patriots.
What's going to happen next?
What is going to happen next? I don't know.
I think the way Tom's looking at it is, that's an easy way to bow out and think that there might not be an NFL season next year. You got to look at reality here. College football or NFL football.
It's scary. It's a long ways away.
Yeah.
The NFL's sitting pretty. Kind of. This happened at the perfect time.
I wouldn't call it sitting pretty, but
compared to the other sports, though, this happened at the perfect time for them, right after this, the Super Bowl, really. As the end of their season and this started. So it couldn't have happened at a better time for the NFL. Because NHL and NBA are like, this is the worst possible time. We're getting right gearing up for the playoffs. Major League Baseball season just getting started. They could do there's too many baseball games anyways, 162. They could do, if we get past this thing in the summer, they could do an 81 game season or something, have a normal season, with these other sports. Too many baseball games. I'm a Tigers fan. There's baseball game every night is too many. So
I lost interest in baseball.
It's too many.
All right,
it's too many games.
If I can bring it back here,
I
just a couple.
Two stocks.
Yeah.
Dennis, you yelled at me yesterday when I mentioned.
I was yelling at everyone.
Yeah.
Wait, I have a couple more. I want to that the chat mentioned Rite Aid. We haven't talked Rite Aid yet. Really for the past couple of weeks.
They're going to stay open. Like the WBA and CVS, I don't think they're going to shut those down.
CVS got whacked yesterday. Did you see that thing? Was there?
Kramer featured it last night, a little bit of a COVID play, and it's been up here pretty good this morning because he was saying that they could get these testing done at the CVS's.
We got a little rally. We're rallying. What you do over there, Spencer? We're rallying. We're back over that, at the pause that we had before the.
I like your inside day. I think Joel's right. I think we're gonna have an inside day.
I'm praying we're gonna have an inside day.
I'm not praying.
I would go pray, but my synagogue's not open.
It's not open.
No,
there's nowhere to go.
There's not a lot that's open here right now.
Yeah. No, Dennis, you yelled at me when I mentioned BNTX and their work. It's now up another 22 sticks at 61.85. They're working on it. Yeah.
Where was it yesterday? No, wait though. Where was it yesterday when we were looking at it? Because we can say it's up another 22 sticks, but
it was in the 40s. It was the 40s.
It was higher because you said it was up over 60%, and it was closed the previous day at 30. So that would have made it was over 50 yesterday.
Yeah, so, and now it's at 62.
So it's went up more, but it's not 22 sticks from when we were bringing it up.
I thought it was around 40.
No, because you said, okay, I remember you saying, here's a stock that's up 60%. So if we do 60%. Up $30, it means it was around, what's my year? You're good at this air math, Joel. I think 47, 48. So you're right, it is up more. So maybe we should talk about these stocks. Maybe I shouldn't talk over you so much. People can make some money.
No, they're working. It's a biotech play with Pfizer.
Yeah. Again, these COVID plays, the air comes out of them very quickly though. So you got to be careful. These are a hot potato. These things can go like crazy. We've seen, even the, obviously the lake and the APTs early on the wind is out completely out of those stock sales. Although some of them are starting to move a little bit again. I did say there was a few, right. I said off the hop, a couple of plays. Zoom video starting to show a little bit of life again. from COVID. Had a decent day yesterday. Netflix, I would not be surprised if it starts to hold up. You know what else I think could hold up and had a good day yesterday? Peloton. Because gyms are closing now.
Talked about this, yeah.
Gyms are closing now. I think people could start viewing this as this is a COVID play here too. It's up again here this morning. I thought of this one was like 20. I think I even mentioned on the show, and I thought of it was like 23 or 24, and I was like, this could be it. But it kept leaking after that.
Yeah.
So now all of a sudden I was like a week early on it. So I think this is a potential COVID play too, though. Now that gyms are closing, you could see Peloton.
Yep. Okay. All right, Spencer, you want to wrap things up here on this hopefully turnaround Tuesday?
And Dennis, just this is why I love our chat. Dennis, Stock Rocket in the YouTube chat just said that Doug Ford has declared a state of emergency for Ontario, just so you know. So
Doug Ford just did. Oh, thanks, Doug Ford.
Yeah. So you're on a state of emergency along with the rest of us here now.
I want to say happy St. Patrick's Day to everyone.
Happy St. Patrick's Day.
Drink your green beers with your family in the safety of your own home. That is my I don't give recommendations, but that's my official recommendation for you on this personal level is to drink your green beers at home with your family and enjoy St. Patrick's Day.
And
Skype or Zoom video with a friend.
This is from Renee in the YouTube chat, and she puts not sure of the accuracy and credibility, but Indian doctors cure Italian COVID-19 patient with swine flu drugs, Lopanavir and I'm terrible.
You're seeing this. Yeah,
you
seeing
just
this
don't know if that's true. You just don't know if that's
You're
true.
seeing these headlines pop up all over the place, different cures, different things that help it. I mean, you're going to continue to see this. And obviously there's some companies that want to sell their own, they sell their own stuff. Like I've heard zinc can work. I mean, we've heard lots of different things. There's been no official cure for this. There's stuff that maybe helps symptoms. And, think about normal cold medicines, probably cold and flu medicines are going to help the symptoms of this. So it's a matter of whether it gets into your lungs and starts causing respiratory problems. That's when you got to seek help.
All right, that'll be it for our show. Thanks to our guest, Michelle Krebs. Thanks to everyone in our chat, both on YouTube and on premarket.benzinga.com. You can always catch a replay of our show on YouTube or catch the podcast version on iTunes, SoundCloud, Stitcher, Spotify, or TuneIn. Please remember all the information from our show is meant to be used as informational purposes only and not for investing or trading advice.
Spencer, I'm sorry.
Yeah.
You want to do a 340 again today?
Yes, I was going to mention that. Yesterday, Joel and I hopped on a 345 and talked our way into the close. We'll be doing that again today. So at around 340, 345, Joel and I will be coming on.
Let's go 340, and I got Anne-Marie Band coming on at 340.
Okay,
excellent. I love this closing
Excellent.
show.
So pre-market
That's
prep.
a busy time for me, so I don't know if I'll
I
be on
understand.
that one.
Yeah, don't worry about that.
Pre-market prep.
I'd love to
People have
do
enough
close.
of you in an hour.
Yeah, I know. I talk too much anyways.
Yeah.
Yep.
Okay.
So pre-market prep at the close today at 345 or at 340, I should say, with the Anne-Marie Band. Thanks to everyone who joined us today. Have a great rest of your day. Happy St. Patrick's Day. We'll be back with you tomorrow.